Hello to all traders and welcome to another monthly engagement for the US Non-Farm Payrolls, NFP. Today is Friday, the 6th of September, and we are expecting last month's NFP data, which is August. Just for those who are interested in a bit of a fun fact, back in 1901, the 6th of September, it was the first time that we heard that American explorer Robert Peary had discovered the North Pole. For those and I'm mentioning this fact why? Because for those who trade, they should also know that when we're talking about north, we're talking about prices being bullish or moving to the upside. When we're talking about south, is the opposite. So prices should be getting lower. It's just a bearish move. So today, we're gonna use our original, usual schedule. Before we proceed, you can have a look here on my Twitter if you want to follow, and also my LinkedIn is where I post daily market insights video and other very interesting posts, of course, for the Forex markets. Before we go ahead, I want to read the risk disclaimer quickly. Foreign exchange trading and investment in derivatives can be highly speculative and may result in loss as well as profits. Foreign exchange and derivatives trading is not suitable for many members of the public, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitutes a solicitation for the purpose of the purchase or sale of any commodity, security, or investment, nor should it serve as the basis for an investment decision. Orbex Limited does not guarantee the accuracy or completeness of any information or analysis supplied. So the agenda, as usual, we're going to have a preview, okay, see what analysts are expecting. We're going to see which indicators can help with the projections and why. So that's completely fundamental part. And I will give you my 2 cents following some sort of analysis. We're going to choose which is the best pair to trade, and that will be based on technicals as well as fundamentals and economics, how we can protect your capital. And of course, then we're going to check what's happening in the charts. We're going to draw some nice supports and resistance levels. Some of those can be used for entries or exits. So pay attention and just keep your breath until the NFP results come out. Keep your breath. So the analysis. The last NFP payrolls were negative, as you can probably see. Okay, expectations for these month's data are better than the previous at 177K. Now, the forecast last time was at 178K. So we had a weakening in employment, a slowdown for various reasons. They could be economic, mainly also even related to trade war effects. We're going to see the economic indicators a little bit further down. Now, there is a cyclical slowdown, okay? And I believe this is coming from the manufacturing sector, mainly. But the thing is that we still see that the analysts expect an expansion compared to the last result, okay? So they expect like 13,000, which is not really a significant amount, even to open, to select a direction to trade, to be honest. Now, the August release was worse than the July's as well, okay? 224 versus 164K. But don't forget that August NFP was revised down, okay, from 224 to 193K. This is nearly 30K revision to the downside, okay? And as we can see as well over here, we see that there is some sort of contraction if we look at the historical data, okay, in employment change. So there is some sort of contraction, which might come a little bit lower here, and then just we're going to see a breakout either to the upside or downside. Don't think that these data cannot be seen as charts, right? Over here, for example, we did this correction. This is sort of a small range, and then we had a tick to the upside, and then a tick to the outside. So you can expect that to be similarly. Now let's just check the next page. Analyst expectations. So in terms of unemployment rate, they are expecting an increase of 3.6. Okay, this is an increase because higher employment change, of course, rate is worse for the employment. In terms of the non-farm payrolls, in August, analysts missed expectations of 3.6, and that weakened to 3.7. Now, if we want to talk about the hourly earnings a little bit, they are critical for this report, as a bad figure will add further pressures to the Fed in terms of their policy, forward policy, okay, and may even validate another rate cut in the next couple of weeks, which is, if I'm not mistaken, is the FOMC. Now, the previous figures improved by 10 basis points from 0.2 to 0.3, okay, but they are remained the same as July's 0.3 figure. The important thing to see is that we are expecting that to go down about 20 basis points. Now, the wages expectations, they are upbeat above 3%, okay, and that hits to future inflation, but the year-on-year figure came out worse than the expected 3.3 at 3.9, although it was better than the July's figure at 3.1. Now, in terms of inflation, because the average hourly earnings are actually very well connected with CPI inflation, which is the consumer price. The latest data we saw in August, the year-on-year CPI figures rose from 1.6 to 1.8, and that exceeded expectations for 20 basis points, but it raises concerns while the rates are falling and while the CPI remains below the trend line. Okay. Now, I've also had a look at the CME FedWatch tool, and that shows that a target rate of 1.75 to 2% with a probability of 91.2%. This is for a rate cut, right? This is the CME FedWatch tool. So they are expecting indeed with 92% probability for Fed to cut. Now, NFP preview quickly. We need to look at the ISM and non-ISM manufacturing. We need to see the challenger jobs cuts and also the jobless claims, the ADP non-farm employment report, the consumer confidence, which is the University of Michigan, and also the consumer confidence CCI. These are the lagging indicators, okay? Now, leading indicators, they are the treasury yields as well as the equities and also crude oil prices. I will not focus much on the lagging ones because we have a table on the next slide. But on in terms of the leading ones, you should know that when the yields are up, it means that market sentiment before the NFP, right, the same day, it means that the market sentiment is bullish, and that hints that market participants project a good NFP. Okay, and the equities are assumed to be positively correlated. Now, crude oil prices, when the crude oil prices are up just before the NFP, the expectations are somewhat positive as well, as the boost in inflation, okay, rises prospects for higher wages. So one is related to wages, the other one is related to the employment situation, pretty much. Okay, and here's how we can see what would be the best pair to trade, and that has to do with interest rate differentials. Okay, so pretty much we're looking at which bank against another has the biggest gap in terms of interest rates. As you all know, at the moment, the United States is the one that is at 2.25, the highest interest rates globally. I mean, not globally, there's other countries that have 8, 9, 10 if we take the emerging currencies, but we're not talking about the emerging currencies right now. And of course, the one that is the least positive, let's say, is the Switzerland's, which is at minus 0.75%. Okay, and the only changes that we saw was Australia and New Zealand. New Zealand cut 50 basis points. I think Australia cut 25 basis points. I think last time was in July for both. August and then July. So dollar Swiss franc would be a very good option, but that's given, of course, that the NFP is positive. Okay, that is always a very good option. Now, in terms of how to protect our capital, one second, I think I'm missing a page here. Let me just open this quickly. I've got this in an Excel sheet. So what we're looking here, we're looking at the latest data coming out, economic data coming out from the US. They are the ones exactly that we saw in the previous slide, okay? So one of them is the ISM manufacturing, okay? That came out better than expected, which is a positive for the US dollar. Now, the employment component, however, in the non-manufacturing sector fell from a forecast of 56.5 to 53.10, which is a very big decline, if you ask, okay? So does this really tell us that the employment is going to be affected by this? I'm certain that it's going to be affected, but this is a percentage-wise. Now, we don't really know how, in what sort of ratio this decline of 3% would affect the NFP numbers, and whether those were considered. I mean, they should, but if they were considered in the forecast. But don't forget that the expectations for forecast came out way before the employment component was out, because that happened only yesterday, if not mistaken. Now, ISM manufacturing as well came out worse than expected, but the employment component was better than expected and better than the previous. Challenger jobs cuts, it's negative, because more people were laid off over the past month, okay, 58.6K, and the previous time was 40K, which either way, either you ask, is very high. Now, jobless claims as well, they rose to 215K, which means there is now more people requesting for benefits. The ADP, non-farm employment, which I tend to ignore most of the time, because it's very volatile, and most of the time the results are really like just not making sense, came out better than expected, way better than expected, and way better than the previous. The University of Michigan consumer sentiment, worse than expected, and the CBN consumer confidence, better than expected, but a tad lower than the previous figure. Now, if we take those indicators, which is the lagging indicators, I would just compare pros and cons. We have 4 and 4, okay? And this is a tie. Now, if we look at the leading indicators, which are, I would say, a little bit more important, considering you can take a taste of market sentiment before the NFP, we see treasury yields are up, the equities are up, and crude oil is down. Now, could this be that the unemployment figures are going to be good and the average earnings are going to be bad? It's very possible, okay? Now, if that happened, of course, the results would be mixed. We'll never know what to expect, okay? Because with all this trade war situation, you know, affecting economic data, it's becoming harder and harder to predict the right numbers, right? Now, in terms of protecting my risk capital, right, and before we go to the charts, it was always wise to avoid trading during the NFP, as volatility is very, very high, okay? And everybody is expecting whip show effects, as well as the spreads to be increased from the liquidity providers themselves, okay? If you decide to go ahead, make sure you have a stop loss and a take profit level there, so that you can at least, you know, discount all your emotional, all your emotions pretty much. If you want to stay out and you want to avoid the risk altogether, you can either hedge your positions or you can close out all your positions, whether they are on the winning or the losing side. And then you could reinitiate it, but that, of course, that would mean that you know, you are paying again for the spread and for another trade. Now, if you are eager to trade despite all these warnings, it's always a good idea to let the markets calm down a bit. Give the market like half an hour or even an hour before entering the trade, because there's always going to be some take profit, and markets are going to reverse one way or the other up to some point. It might be a reversal, it might be a pullback, but they will definitely reverse up to some point, maybe to the 50 or to the 38% of the Fibonacci. Now, of course, that's good an idea because you can analyze the data after the release, okay? And after the release, obviously, you have a very, very much better idea of whether the markets are trading according to economic data or they're just taking advantage of the high liquidity, let's say. Now, I'll pay attention to divergence as well between the actual and the expectations, okay? And I want to remind you that gaps of 20 and 30K are not really considered as very big market movers, okay? But that is not just about the employment change. We also need to look at the average earnings, yeah, and the unemployment rate. If all of those, all the three components are positive, it's a good NFP. If all of those are negative, it's a bad NFP. Sometimes you might have two of those being positive, one being stagnant. It's still okay, but we're really looking at gaps because everybody trades the headline numbers first, right? We're really looking at gaps that are bigger than 20, 30K. Otherwise, the move is not going to be big on the markets. Okay, so let's just go on the charts. Now, considering the dollar has been quite weak, right? We really need to look at which of the pairs have performed best or better, let's say, than others against the US dollar. The European, the dollar, the euro dollar is not one to consider if, obviously it is from a technical perspective, but thinking in terms of momentum, it might not be the best idea because, for example, if you ask me, the Aussie dollar has really made has made a killing, let's just say, since Tuesday, if I'm not mistaken, where the ISM manufacturing PMI finally came after years in a contractionary level below 50. Okay, so Aussie, in general, all high beta currencies moved to the upside. This one is dollar, Swiss franc, euro dollar, and here we'll have the dollar again as well. It's majors. You can trade pretty much any major, but some of them are supposed to have less of an effect on, or of a reaction, let's say, not an effect. They expect to react more or less than others. Now, my choice for a negative NFP, okay, would be the Aussie dollar. Okay, would be the Aussie dollar because it has been in a very good bullish run, and it hasn't had a pullback for a while now, which means that markets still remain biased to the upside. Okay, now dollar Swiss franc would be a pair to trade in case the NFP actually came out good. And that would also be the case with the dollar yen as well. But as you can see, as we speak, and from looking at the hourly chart I have on my TradingView account, you can see that dollar Swiss franc is moving to the upside, okay? Is moving to the upside, which means that the Swiss franc is very weak compared to the dollar. Now, that tells us that in general, the safe havens are down, okay, which means that can be some sort of inflow on different assets, or most probably some taking profit because the safe havens have had quite a good run over the past, I would say, couple of weeks. So this is an opportunity to take profits, more of a security or a trade to pocket some money before the NFP, right? And this is what institutions do. And they do that obviously because an NFP could just reverse all their gains, okay? And they will end up minimizing the profits, if any, left. So they're taking profits now, and then obviously they want to trade the NFP as well. So dollar Swiss franc is the choice for a negative NFP, and I would say Aussie dollar is the choice for a positive NFP. Now, dollar yen is always a good option. Euro dollar is always a good option, and this is because they're the most liquid traded pairs around the NFP and in general, pretty much, right? Now you may ask, what's happening with the pound? Why the pound is not here? Well, the pound is quite volatile, and then thinking that around this area we're going to have quite the volatility coming in the markets, maybe it would be a good idea to just avoid the pound. But we can indeed have a look we can indeed have a look what's happening with the pound. Okay, so as you see, the pound also had a very good run to the upside, okay? But the Aussie dollar, again, seems to be the favorite choice. You see the pound arrived at this 123.50, which is a very good psychological resistance. And after that started decline a little bit. It has fallen around 50 pips since that top. Now the Aussie actually had a very small pullback and moved before the previous high, right? And that tells us that this market is quite bullish, despite, or let's say regardless of what's going to happen with the NFP. Even if the NFP is good, we might see prices, falling lower, but that's going to be limited to some sort of level, and that would be a good level. Now, let's just have a look at, okay, so we have the Aussie. Let's just change the pound. Let's just change the pound to, dollar yen, because dollar yen is always a good option. Now, of course, this is up to you. What exactly pair you want to trade is really up to you. Now, as you can see, there is some sort of symbols here. They are from daily analysis from Market Insights videos, and they're based on Elliott waves. Now, the thing is, I would go ahead and analyze a bit, but the truth is, during such events, technical analysis doesn't really work. Okay, Elliott wave analysis doesn't really work. It doesn't really matter where you have to predict the markets to go. Okay, the only thing that matters for the markets is where, either to the upside or the downside, where there's been spotted previous high activity. Okay, that's how it works. For example, here I've drawn this support, this resistance level, because it's at 110.80, which is a very good resistance level. Okay, and you can see that because we can easily see there is a lot of activity on that level. Okay, now obviously to the downside, we have drawn this sort of support, which is a previous resistance around 1.0995, which, if you ask me, is very near the 110 psychological level as well, psychological level. So if prices were to move to the upside, anyone, not you, anyone could enter, at some level like a few pips higher. So, for example, at the moment, the price on euro dollar is 110.30. The 110.48 maybe even be too far. Don't forget, we're looking at 1 hour charts, right? So, one second, let me just move that a little. So this one entry could be here, let's say, if euro dollar was higher, was gonna go higher. Your stop loss can be at the end of, let's say, down here. It could be there, right? And then your take profit could be, okay, this is quite a bit of a 100. Okay, I mean, this is 50 pips. You might want to aim 40 pips or 35 pips or something, just to be a bit more, on the safe side, because you wanna get in the market and get out of the market as quickly as possible. Okay. Now, that has, of course, to be also be adjusted. It has to be adjusted closer to the last minute or even 2 minutes, and that is because you have increased spreads, okay, plus very high volatility levels, which means that we could see prices, even if euro dollar is supposed to go up, we could see the prices just moving lower first, okay, and then spiking all the way up, or we can see the prices spiking down and then moving all the way up. So you need to be very careful with your stop loss, as well as your entry point. If you were to trade, of course, I've been always saying that it's not a good idea to open a trade, especially just the minute that the NFP is released. It might even be a better idea if you open a trade before the NFP, if you were sure on your analysis, of course, which is normally is never the case, right? You can never be 100% sure. But if you want to remain risk averse, post NFP would be always the best choice. Now on the dollar Swiss franc, 0.9880, a good level to the downside, 0.99300, and then the 500, to be honest, is a good exit point. Now on the dollar Swiss franc, this is quite far to be an entry, so what we could potentially do is just go into a different activity level down here, because there will be some orders triggered here. It's very close though, right? And have that triggered. What is always a good, not a rule of thumb, maybe a good idea, I would say, is if you want to hedge against that risk of opening a trade that is going to end up, being traded opposite to the direction you wanted to. If we assume that the NFP comes out weaker than expected, that we really want to see the dollar Swiss franc going down, right? So you could use the dollar Swiss franc with a pending order only for a sell order, okay? And for example, use the Aussie dollar only for a buy order, okay? That would give you some sort of protection or even hedge. You'd be able to hedge against high volatility risks, okay? Now, as you see, the markets are not moving as we speak. We are 3 minutes before the results are will be published. Let's just have a quick look on the economic calendar. Let's just open this down here. Don't forget, at the same time, we also have the dollar CAD. Okay, we also have the dollar CAD option, which can be traded for the Canadian employment change numbers. Okay. Let's just go a little bit lower. This is the ADP from yesterday. Yeah, okay, that went a bit, scrolled higher up. There we go. So I'll be watching that one to see what happens. I'm pretty sure all of you have an identical page open on your browser, checking, updating, refreshing. I used to do that. I used to refresh all the time, like click, 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 trying to get some numbers through, you know. Right, 2 minutes left. Euro dollar goes up, dollar Swiss goes down, the dollar yen is not moving, and Aussie dollar is not moving. It's quite interesting to see the Swiss franc weakening. It looks like this is purely a weaker Swiss franc because, okay, Aussie dollar, it seems like Aussie is moving higher. Euro dollar, euro is moving higher. The dollar yen is not moving at all. So that makes it a bit of a interesting pair to watch, no? It might be that the dollar yen is going to move more than anything else. And that's why nobody's trading. And actually it is moving. This is a what? I don't even know what to call it. My numbers are not out yet. Okay, so non-farm employment at 130K, much lower than expected. The expectations were at 177. It came out at 130, 47K before the expectations, which looks like it could be a good opportunity. Now, the unemployment rate, let's have a look here. That's still updating. The unemployment rate at 3.7, okay, so it's less than the expectations. But the thing is that the average hourly earnings came out at 0.4%. Okay. So we have a mixed report, if you ask me, which we have, there we go. So from 3.6, 3.8, non-farm from 177, 130, and below the previous, and then hourly earnings at 0.4. That is a very, very good figure. Okay. The average hourly earnings are related to inflation. The question is the US economy going to remain close to the 2% target while interest rates are falling? That's going to be a very interesting one to see in the near future. So, and as we have assumed and guessed, Aussie dollar is moving up and is the only one that is moving up as aggressively. Everything else seems a bit stagnant at the moment. I think we've seen an initial whipsaw effect, but I have a feeling that we're going to see this is just profit taking, and we're going to see another push for dollar to move perhaps lower. The headline numbers have been traded, and now I guess institutional traders are just trying to really understand whether the numbers that were just printed are positive or negative for the US economy, or will be, because we're also looking at, with this report, of course, we're looking at moving the average unemployment for the next NFP to some sort of lower level now, given that we've had this quite poor employment change, I would say. Now in Canada, where's Canada? There we go. In Canada, the employment change was very good, almost doubled, nearly doubled from 45.5K to 81.1. And the previous time, don't forget, we had a minus 24.2, right? It was a very, very bad figure. Now, the unemployment rate, however, they were expecting it to fall, but it remained exactly the same as previously, which I still think, with these sort of the duplication here, we're looking at very good dollar CAD. So we see the first whip show. Let's just check what's happening with dollar CAD. Yep, it is moving down, and as expected, from 132, 100 down to, that's 138, 180, 30 pips there, very quickly, which could be this previous low over here, of course, would be 25 pips. This one would be 32 pips. Okay, this is another thing, because both events are being posted and being released at the same time. If both are positive, you're not going to see dollar CAD moving because there will be, the results contradict one another. But if one is positive, the other negative, then this is actually a very good option to trade. So the Canadian one was very good. The US one looks bad, if you ask me. And that is a good opportunity here on dollar CAD, which has already pretty much is now dead, if you asked. But of course, as I said, post LFP in about 30 minutes, you can wait for the hourly close, okay, see what's happening at in about 25 minutes. This is 4 p.m., will be 4 p.m. my time, GMT +3. And once you get this candle, you might be able to have some sort of better idea whether the market is going to continue lower or going to see some sort of reversal. Some pullback is always expected just because of profit taking, right? Let's go back to dollar yen here. So dollar yen moved within the hour, right? From 107 to 106.7. This is 30 pips. Now, euro dollar within the hour from 10.22 to 10.42, 20 pips, right? So it didn't move much. Dollar yen moved more. Now, dollar Swiss from 98.9, let's say, to 99.11. This is like 20 pips as well. Aussie dollar, 68.300 to 68.47. Again, not such a big range on an NFP, which brings us back to the point that we're trying to make earlier. If the employment change gap between the forecasts, the estimate, and the actual numbers is not like bigger than 50K, then it is not really going to create big moves in the markets. And this is now actually being validated also in practice. I'm really curious to see what's going to happen within the next 20 minutes, because I have a feeling that we've had the initial whipsaw effect, right? 1, 2, now profits are being closed and will be taken out of the market, okay? And then I have a feeling that we'll start seeing the markets pushing back again. You can never know, right? And considering most majors have really moved against the US dollar, especially since Tuesday, that might be a good fundamental factor to push the prices higher or lower against the dollar. We've had, hold on. Okay, we've got another event later, IVPMI for the Canadian dollar. I mean, it will have an effect, but obviously not as big as the one the NFP had. And later, that is actually one of the reasons, probably, just like seeing at the economic calendar now, that is probably one of the reasons why the markets are not moving as much as well, because we are expecting the Fed Chair Powell to speak, right? And it's very, very, very interesting for the markets and also for the for other parties that follow, for example, the economics as the forex traders and investors in general, to hear what he's going to say this time about forward guidance. Is he going to insist about his previous rate cut being some sort of medium-term adjustment, or is he going to become a bit more bearish? Well, we don't know that, but last time everybody was expecting Powell to be dovish. He wasn't as dovish, and as you remember, we saw a huge plunge in the dollar as well as in the equities. It was the moment where they actually reversed. The S&P, if I'm not mistaken, was around 3,020 or something, and it's managed to fall down at least like 100 pips to 2,900s. over the period following the Fed chair speech. Now, of course, it's also a debate, or debate if you want to call it, I don't know, but it seems that Powell is not really moved by Trump's social media, presence, or his demands to or requests to have the Fed cutting rates more aggressively. It doesn't feel like he's really taking it too hard. He's remaining independent, as the Fed should be, from political situations. The thing is that those political situations have been affecting the markets over the past few months massively. Okay, and there might be necessary for the Fed to step in once again, and that would make Trump very happy. And I don't know if that's good. Happy Trump means that he can go ahead and start imposing more sanctions and increasing tariffs. So I'm not sure whether that's a good idea. So as expected, just 2 minutes ago, we see this initial capital inflow being rejuvenated after some profits were taken. Euro dollar is moving up. The Aussie dollar is moving up. Dollar Swiss franc is moving down. Now, we will be able to see that dollar yen is holding strong there. Okay, so it should be further down, but it looks like there is some sort of weakness on the yen. And that allows the dollar yen to move a little bit higher. Now, dollar Swiss franc would be the best option to sell, as we said earlier. This is always the case, right? Because, I mean, considering at the moment at least, and for the next few months, we will have the US being around, 2% interest rates, 1.75, 1.5, whatever that would be, since the New Zealand and Australia cut rates, and they are near 1% now. We're not going to see a better pair to trade if the NFP numbers are worse, okay? Dollar Swiss franc. And that is because also the accommodative policy of Switzerland, which actually, I might add that over the past few days, there was a headline saying that, not a headline, after a speech. Let's check the calendar again. A calendar can be a very interesting tool for traders, by the way, guys. So let's have a look. Where is it? Switzerland. No, we're looking at the speech. It was last night. There we go. So Chairman Jordan speech yesterday, that was. He hinted that the SNB might increase rates. And that was quite surprising. But nevertheless, still we would have the widest interest rate differentials between the SNB and the Fed anyway. So when economic data come out for a weaker dollar Swiss franc is, as long as the differential supports that, the best choice. So on top of the data that we looked, for example, over here, right? We were expecting, as we said, we had a tie here, 4 and 4, right? Some, of course, indicators are more important than others, but what is important to look at is the daily sentiment, for example. So treasury yields were up, equities were up, but crude oil was down, and crude oil was down more than anything else. Okay. Now the thing is that not only these sort of economic data are shows us mixed signs, that these two numbers that really are supposed to be positive when the NFP is supposed to come out good, and this one that's supposed to come negative when the average earnings are affected, it actually shows us that even this relationship can break down, okay? The important thing to take from this, and as it seems like it's validated, it's the fact that because we have a 2-1, right, not all of the 3 components were positive, that data are expected to be mixed. And that was the case, okay? Now, that level is heat, that level down here is heat, that level nearly heat, that level nearly heat. Let's have a look at other pairs. Let's look at pound. How is pound performing? You see, as I expected, it's not really moving much. It's in a consolidation anyway. Gold. Gold had a very good move to the upside from near psychological 1502 up to 1517 as we speak, and we might have this level being, actually I would put that down there, right here to the previous low, which is exactly where the rejection is actually seen at the moment as we speak. Dollar Swiss, we are seeing it down here. Dollar CAD, entry and exit, very good. Gold, oil is not moving. Interesting, oil is not moving. We said that when the report is, when the oil is going down, and it was going down, it's down for the day. But actually, it moved up over the past few hours, right? It moved up over the last hour before the NFP. So we'll also pay attention to that. So I was saying, while this is negative for the day, we should be expecting the average earnings to fall. But average earnings came out much better than expected, okay? And that makes oil traders a bit confused at the moment. That's why we don't see much reaction on that, okay? Of course, the dollar index is falling. It fell right to the level we drew before. Guys, don't forget that drawing levels is not really, it's like a piece of cake, let's say. It's, you just take one of the closest previous support or resistance level that makes sense. And when I'm saying make sense, what I mean that it should make sense in terms of the range that the price is going to move, towards that level. So if the range is 10 pips, this is obviously a potential entry point, right? And that would be a support or resistance, because at all those activity levels, you are always expecting some orders to come through, right? You don't know whether they are positive or negative, but if you are sitting here like 10 pips below an entry level, it's obviously that this activity level is going to be pushing prices towards the direction of the economic data rather than against it. Now, if these support or resistance or the activity level, let's say, is 30 and 40 and 50 pips away, okay, then you're really looking at this as an exit level, okay, rather than anything else. So which one is this? Okay, the S&P, let's have a look. S&P is not really moving much. Yeah, as I said, oil and the S&P shows us that these results are mixed. Aussie, we are looking again. So we've had these stops or profits taken out. As you can see, we really hit that level, exactly at that level. But considering there is spreads, that trade would have not closed, okay? So you always need to consider the spreads during the NFP. And if I may also add, euro dollar tends to have the lowest spreads as always, because it's the most traded. So if during NFP as well, the spreads on euro dollar are smaller than any other pair that we are currently analyzing, then go ahead and use the euro dollar instead of spending more on spreads and even risking not taking profits. Kiwi is moving quite well as well, along with Aussie. I would say even a little bit better than that. It might be a case where you have less institutional investors here, okay, which means that they want to push prices a little bit higher before they start taking profits, okay, because this is also a case. You need to consider when you look at a candle, you don't look at it as in terms of price, okay? You have to look at it as in terms of data, and the data you see there is not just the exchange rate, okay? You need to see how big the candle is, how fast it's moving, okay? Where are the previous candles? How do they look like? And things like this. You need to consider everything. So looking at institutional, this is a time where institutions are in. This is probably a pair where less institutions they have placed bets, and which is expected because it's Kiwi. It's not Aussie dollar or euro dollar. A very good move on silver as well. Now euro pound. Now from these you can see that as we speak, euro is a better choice than pound, and that you can see on euro pound, because you should have both pairs being dependent on the European economy against the US economy, plus the UK economy against the US economy. So since the US or the actual dollar itself moves to the downside as we speak, and then euro is moving to the upside, it also means that euro is a better choice for traders now, and they're buying much bigger blocks of euros rather than pounds. Yeah, the rest are not supposed to move much, to be honest. But since we are on that one, let's just go back to Aussie here, dollar yen. I'll be honest, I don't really think we're going to see much more flows coming in. It's also Friday, and in a few hours, everybody is expecting Mr. Powell to speak. So there's going to be much more flows coming through if he's also bearish, right? Then we're going to see prices really moving against the dollar in a much more sizable manner. If he's bullish, that will be restricted. I mean, not in terms of how many bulls we're going to see, but even the bears will be restricted, because when you have, let's say, an event that was negative for dollar and then you get another one on top again for the dollar, then that is going to push prices further out than expected, and it will weaken the currency more than expected. Now, if Fed chair comes out and he's rather neutral, let's say, we're not going to see much moves. If he's bearish, we might see all those gains that are being recorded now during the NFP and after the NFP. We might see all those gains being recovered for the dollar. Okay. Now, there is a few minutes left, and I want to see if there is any questions anyone might have before we end this monthly webinar. So back on the presentation. Okay, we've had that. Yeah, this is a slide I think that I jumped. It slipped. But anyway, if you look at this chart, this is one of the ways that we're looking at which pair is good to buy or sell after the NFP, right? Depending on the results, of course. Now, this is something similar to what I did on the charts, which we were checking on the hourly candle, whether a pair is moving up or down, and how much up or down it has moved over a period of time, let's say over 100 candlesticks or something like 50 candlesticks. It really depends. And this is like something similar, but this is on the daily basis. So this currency meter is showing which pairs are strong for the day. Okay, this is for the daily strength. Okay, so we can indeed see that the Aussie and the Kiwi are very strong. Okay, the dollar doesn't matter because I mean it does a little, but considering that we are going to have the dollar being affected, the main one that is being affected, then it does really matter how it really moves. Then we've had the yen being quite strong, but the Swiss franc very weak. Okay, and that's why we're saying that, you know, the US USD against the CHF is a very good option to trade, not only from a interest rate perspective, but also from a daily sentiment perspective. Okay, now euro wasn't too strong, pound was a little bit stronger. Obviously that was probably like an hour before the NFP when I captured this image. So at the moment we do see that the euro is a little bit stronger than the pound as it stands. Now the Canadian doesn't really matter as well, because these two are the ones who have been affected mostly for the day. So we can expect any sort of swings on those two. And you know, it seems like that has actually worked out pretty well. You know, the Aussies and the Kiwi are moving the most against the dollar, and the one that is moving also along is the Swiss franc. Okay, it's quite weak and obviously not a good option to consider. If the it would be a good option to consider if the NFP came out good. Okay. We checked those. Okay. So these are all important things to consider what you're doing when you try to understand whether an NFP is going to come out good or bad. And that is some sort of macro analysis you can do before the NFP. It will just probably take you, I would say, 30 minutes or so to have a look, to put these figures together and check the currency meter, check the interest rate differentials, but you should know because you're a forex trader and you're involved. And then these results really don't make much of a difference to the result. It's just that for you to understand where the economy is moving by looking at the previous data, right? So this is all for today. If you have any questions, you can feel free to contact on my social channels, on my Twitter, on my LinkedIn as well. You can see the relative information here, and I will get back to you if I can and when I can. I want to thank you for watching for another day, for being here with us. And I want to remind you to visit our blog. Okay, it's where we cover the latest news. We have trading ideas. You know, we have a lot of different educational articles that we write. all to help you understand the markets better, not only from a general perspective, but also on a daily perspective, because we update it with 5 to 10 different types of content on a daily basis. And this is all done, of course, to help you, to support you with your trading decisions, also in a responsible way. So I want to thank you once again, and have a nice weekend. I will see you again next month.